Hello guys and welcome back to the channel on this very late evening, and this video is done after I helped my best friend move his house. So the whole day I was moving furniture, so I'm effing tired, and I came home and I was thinking I will skip a video today, and then I saw that one of my top 2024 stocks is having drama already. So I was like, okay, I have to make a video, and that stock is Tesla. And Tesla is a very interesting stock because I believe that they have unbelievable future potential, but the next few years is going to be very rough on them. And a lot of people are misestimating what they are going to do, and they're too optimistic about the stock. So I don't know if you know, I bought Tesla stock. I was a shareholder for almost 2 years. And after J-Powell's last meeting and their last earnings call, it wasn't J-Powell's last meeting, but it was one J-Powell meeting just before the earnings call. And then the earnings call came out, and Elon Musk's tone and, his explaining on how they are viewing the prices basically made me sell the stock because I saw that my thesis was wrong. And basically, a super good Tesla analyst, Troy Teslike on Twitter, who has actually a very good track record on, I'm just going to show you on predicting Tesla, is sort of going my way on explaining Tesla, and people are a lot of very upset about it. So let's see what the drama is. Please make sure you're subscribed if you haven't yet to the channel, and then let me know in the comments what you think about this. So here it is. A year ago on January 6, 2023, I calculated my first estimate for the full year, 1,821,000. That was before Tesla announced the 1.8 million delivery target on the 25th of January 2023. A year later, that estimate still looks good. And then here he quotes his tweet. This year, I'm once again calculating the estimate for a full year before Tesla announces their target, most likely on 24th of January 2024 during the next earnings call. After reviewing all the details, 2.2 million does not seem possible to me. So this is the line that got a lot of Tesla people upset, because Tesla is supposed to be growing 50% year over year. And if they produce 1.8 million cars last year, and this year they are producing 2.2, it's a bit less than 20%. And this guy is saying that that is not even possible. Let's go on. So therefore, I believe there will be either 2 million, which would be only a 10% growth, or 2.1 million, which is a little bit more than 15% growth. We will find out in a few weeks. I'm just trying to be as accurate as possible, and if you don't like my estimates, that's okay, as long as you express it respectfully. I've already blocked some people. I don't know why. Tesla, I really like Tesla, right? But it has such a cult that some people, if you say bad things about Tesla, like, they really start chasing you and hunting you down, and I don't understand why. And probably I'm going to get a lot of hate in this video also. So my problem with Tesla is that I believe a lot of people are misestimating what higher for longer means. And I think that they see that Tesla's gross margins went down, and this is because of the higher interest rates, which is correct. So far so good. But then they also believe that as the interest rates come down, the gross margin and the pricing is going to come back up. But this is where I feel that these people are wrong, because you have a price is basically supply and demand. And, the price ends up where you find equilibrium between, the buyers and the sellers. So the supply here is how many cars Tesla produces, and the demand is, how much cars the market is taking up. So while I completely agree that the higher interest rates completely dampen the demand for Teslas, and this is why they need to discount. But they are discounting because they increased the production last year by 30 to 40%. I think the 1.8 million is going to be around 40%. It's very late. Don't hold my numbers against me. So next year, if they want to increase their prices, So these are the effects that is going to happen, and this is very important that you pay attention. So if interest rates come down, the demand will increase. But if they increase prices, it will decrease the demand. So if they increase prices, the demand is going to stay the same. So that means that if Tesla were to produce 1.8 million cars again, yes, you're correct. The margins will go back up and the gross margins come back. But then the stock is not a growth stock anymore. The EPS is not going to grow as much as is priced in, and the stock price is going to collapse. Okay? Or they can choose to continue to discount and produce 3 million cars, but then the EPS is not going to go up. So even though the interest rates come down, but because they're trying to push volume, they will have to keep the prices down, which will keep the EPS down, which again is not going to be good for the stock. And this is where I think people are wrong. They think that interest rates come down, prices go up. But in my opinion, this would only be true if Tesla was going after the same demand. And this is exactly what this guy is talking about. And he is basically saying that Tesla is going to choose the path to, slowly increase their production. And, that means that maybe they can increase the prices a little bit. Maybe they can keep prices the same, but they're not increasing the production definitely at the 50% pace anymore. So the only place where the stock can grow, we know it's not going to be Cybertruck because Cybertruck is production limited. The only place where the stock can go is FSD, but FSD, again, such a catch-22, requires more sales. So for the predictions to come through on FSD and the increased margins, you want to exponentially increase the number of Teslas that you're selling every year. So you want to go from 2 million to 3 million to 5 million to 7 million, because if you don't own a Tesla, you're not a public for the FSD. They can't sell FSD to you. So we really get into this very interesting conundrum regarding the Tesla as a company and Tesla as a stock price in the short term. So I believe that there has to be a correction in the short term that corrects for these things. So let's continue reading. Over the years, Tesla reduced its prices in China to boost unit sales, but the potential for more price cuts is now limited. Solid blue line shows the ASP of Model Y, standard range, and dotted blue is its COGS, the gap between them and Tesla's gross profit. The red line shows the Model 3 standard range. So here you can see this chart, and then his point is that the prices are coming down as well as the cost of goods is coming down, but you can see that it's not going down as fast, so it's kind of limited how much they can decrease the prices. This year, I'm once again calculating my estimate for a full year before Tesla announces their target, most likely on the 24th of January during the next earnings call. After reviewing the details, the 2.2 million doesn't seem possible to me. So that's bad, okay? Therefore, I believe it will be either 2 million or 2.1 million. We'll find out in a few weeks. I'm just trying to be as accurate as possible. Exactly. So let's continue reading again. So what delivery targets should Tesla announce for 2024, considering the potential for more price cuts and lower EPS associated with 2.1 million deliveries compared to 2 million? So again, he's pointing out the exact same thing, that if they increase volume, they will have to lower price or keep the price the same. And if they don't pump the volume, then the EPS is probably going to be better, but not as good as what's priced in the stock, because Tesla's stock price has a lot of growth priced in. And if that growth disappears, the stock has to readjust, and that's not going to be good. So Tesla Q4 summary: record global production and deliveries. Production might exceed 500,000 for the first time, but deliveries will be clearly less. Record Model Y sales in China, up by 40%. Weakest Model Y sales in Europe in the last 5 quarters. Flat total sales in EU and US. So again, we come to the same problem that I've been explaining, that I think that the car business of Tesla is going to flatten out. for the time being until the economy changes or something other changes. FSD is something that can really change things around. Robotaxi is something that can clearly change things around. Tesla bot is something that can clearly change things around, but none of them are really slated for 2024. And I believe that the stock has to readjust. And when the stock readjusts, I am definitely a buyer for the stock. I published my price target for Tesla in a very hated video when I first did it. I'm going to try to link it. And if you're a Patreon member, I can basically send that video to you. And of course, if you're a Patreon member, then you have access to all the tables and calculations that I do on the stock, so you can fit it with your assumptions. And yeah, so drama. 2024 is already starting out with a bang. I hope you had wonderful holidays and you got to spend it with the families and you're re-energized for a new year of stock market. Please let me know in the comments about what you think, and I'll see you in the next video. Ciao, ciao.